All right, so welcome back to lecture three. All right, so this is like a beginner's guide to technical analysis, and we have our topic and we have our subsection. So, um, technical analysis, the basics. We have what is technical analysis. We have types of chart, support and resistance, trend lines, and market structure. So, what I'll be doing today, I'll be doing like the basics, and I'll be simplifying all of them. We're not going to be doing the advanced stuff. It's just like an intro into technical analysis. So what is technical analysis? Because now, remember for the first introduction to Forex class we had, I told you guys the four parts of the Forex market, foreign exchange. Told you guys about the technicals, psychology, the fundamentals, and the sentiment. Okay. So these are the four pillars that hold the Forex market, that hold the Forex space. So now we're talking about the technical part because technical is like the foundation. Without good technical knowledge about the Forex market, you cannot be a good trader, or you cannot even be a trader. So now, what is technical analysis? Technical analysis is the study of historical price movements to predict future price behavior. It involves reading charts, the patterns, price reactions instead of economic data. Economic data, we have to rely on fundamentals for that. So, but this is technical. The price reflects all information. History tends to repeat itself. Market moves in trends. So now, in the forest world, price moves. What we're studying is price. We call it price action. You must have heard of the word, or if you've not heard of it, you're hearing it for the first time. Price moves. Call it price action. Action, something, an activity. So price is always in action. It's always moving. It's always doing something. Price has done something in the past. There's a likely chance it's going to repeat the same thing. So that's why in technical analysis, we're able to study price and see that price has patterns. Price has reactions from certain historical price points. So now that is what technical analysis is. We have different types of charts. Let me get into that so then we can fall down into others. So that's it about technical analysis. It's all about price action. What has price done in the past? What is price doing now? Price tells a story. In forex trading, the aspect of technical analysis, price tells a story. Okay, price must have sang a song in the previous time, and now what you're doing is you're following the lyrics, looking for hesitation points, looking for places where price react to, understand, or to create new lyrics for the song. So that's as simple as it is for technical analysis and for price action. Let's break it down. We have our types of charts. We have three types of charts. Okay, so we have three types of charts. We have the line chart, we have the bar chart, and we have the candlestick chart. So now, so I was saying earlier, let me bring this out. Let's say for the line chart, yeah, for the line chart, we have something like this. So the line chart is, these are price moves for the line chart, yeah. So now you notice something. Price looks like what? It looks like it's moving in waves. I always tell people something, especially those in the science world. Price moves in waves. So for the line chart, it just shows you the peaks and the troughs of the price. Shows you the peaks and the trough. When I mean the peaks and the trough, when I mean peaks and trough, I mean the highs and the lows. Price doesn't really give you details for when we're talking about the line chart. We have different types of chart, and line chart is one of them. So this is how line it looks like. It looks like this is how it looks like. It's giving you peaks and trough, right? Peaks, trough. Then it's going to give you another peak, trough. It depends on the direction price is actually moving. Okay, that's for the line chart. And let me give you a much more visual uh, much more visual explanation on that. So this is now a candlestick chart. So let me go to a line chart. Let me create it to be. This is how line chart looks like. Okay, can you see this? If you can see this, just give me a reaction. So this is what a line chart looks like. And because this is a basis, I'm not going to explain the reason for a line chart. We're just going to skip some of this, then later come back to it, okay? So line chart just gives you the simple close to close price. It is a basic trend view. It doesn't give you, okay, I see your reaction. It doesn't give you like concrete storytelling. It just tells you, oh, price is moving in waveform. Okay, what is this, right? Then let's move back to where we are. So we already have an understanding that this is what it looks like. Yeah, just give you a close to close view of price. Then we have what the bar chart. We have the bar chart. Let me erase this. One more. Yeah. Then we have the bar chart. We have the bar chart. The bar chart is one of the oldest charts we've ever had. I'm sure maybe you know about it, but let me give you some insight. So bar chart just tells us the open, yeah, the high, the close, and the low of a price action. So it's something similar like this. You're going to see something like this. I think you have the open, you have the run above the high, yeah, and we have the close. So I'm going to take in this. Yeah, you always see something like this. Most often, depending on the direction, if it's a bullish candle, if it's a bearish candle, they are different. So this is how it is. When price opens, it gives you a rally up, giving you the high of the candle, right? Then comes down, creates the body of the candle, but there's no really body. It's just like a line like this. Gives you the low, then comes back up to give you what the close of the candle. Then it opens again. That's how it continues. It opens again. Now, depending on what it is, yeah, gives you a rally up, they come down to close. This is in a bearish scenario. Then you see price will keep tanking down. Then if price is to go up back bullish, what's it going to do? It opens, yeah, it rallies down, comes up, then what? Closes. You see how the candle changed direction. Yeah, so this is what it looks like for the bar chart. Just gives you the open, the high, the close, and the low of price action. That is the story it tells. That's the only story it tells. Remember we said earlier that the line chart gives us a simple close to close price. While the bar chart now, it just shows us the open, the high, the low, the close, OHLC. It gives us a detailed structure of what price is presently doing. That is it. So now I'm going to give you a visual display of what the bar chart looks like. This was the line chart. We said it moves in waveform. Yeah. So now I'm going to show you what a bar chart. This is what they used to use in not I won't say ancient times, chart, but now what did they use? You understand? So let me give us a bigger candle. Let's go to the higher time frame. So can we see this? Can you see this on the chart? Can you see this on the chart? Can you see the candlesticks there? Yes, good. So you can see how it looks like. The same thing, same thing. This is the information it gives. Nothing more than this. This is it. This is a cluster of what it looks like. Yeah. The open, the high, the low, and the close. That is it. So let's get back to our chart. So now we know what the bar chart looks like. And let's get down to the candlestick, right? The candlestick is a visual OHLC. OHLC represents the open, the high, the low, and the close. So now this one is a visual of what the bar chart looks like. It's like a remodification, just like your iPhone 16. Then you have iPhone 16 Pro Max. Then you have, I don't know how they elevate all those things. And just like you have something, your ChatGPT, and you have ChatGPT 2.0, JBT 4.0. So this is like an upgrade. It has a better understanding. It gives you better understanding of what price action is telling, you understand, in a candlestick. So this is normally you call it Japanese candlestick, but you can call it candlestick. Let's just put Japanese. The J representing Japanese candlestick. All right. As the initial for Japanese candlesticks. Okay. So this gives us a clearer understanding of the open, the high, and the close. It tells us story. It's just like the first one now, coming to you. I walk up to you. Okay, send some message. Seems harder to understand. Which particular one? Just can you send a message? I'm just seeing your chart right now. Which one seems harder to understand? Is it the line chart, the bar chart, or Japanese? So I could clarify if I move forward. The bar chart, like harder to read. Yeah, yeah, it seems harder to read because it's not giving you like a clear understanding. It's not telling you the story. So now, what I was going to say was, like now, if I walk up to you, right? If I walk up to you and I want to give you a gist, and I tell you, ah, Tinubu president. Get, I just told you two words. Uh I didn't give you like the main content. What you just know is Tinubu president. Okay, what's next after Tinubu president? Now this is what the line chart does. The line chart just tells you Tinubu president. Okay, Tinubu president. I know Tinubu is president, but what? Where's the juice inside? Where's the content? Then the bar chart tells you something like Tinubu is the president of. It starts where it stops. All right, Tinubu is president of what? Of where? Of who? Of, you understand? What body is he the president of? President of what? Pure water factory. President of what? Church department. President of what? Hellfire. Which one? You understand? That's what the bar chart does. It just tells us because line chart has told us Tinubu president. Now the bar chart is telling us what? Tinubu president of no direction. You get. Then now the Japanese candlesticks tells us a better story, you understand, of what's happening, of the present price action. Japanese candlesticks tells us Tinubu is the president of Nigeria, and Nigeria is an African country. You understand? Now you know whenever you can tell someone, Tinubu is president of Nigeria, or that you know that country, Nigeria. Yeah, Tinubu. Nigeria is an African country. Can you imagine? I even thought Nigeria was an European country based on their skin color. They are very light skinned. You get so now that's what Japanese candlestick is telling us. It's giving us juicy stories. So let's go check out what they look like. So you can have like a visual display of what Japanese candlestick look like. This was the bar chart. Now I'm going to change it back to the Japanese candlesticks. Can you see it? They are full body. And all of these candlesticks have story. Every one of them are different. You see all these things you're seeing? They are different. Yeah, they are different. So let's go back to so the Japanese candlesticks. I'm going to just do a bit of a drawing. So let's have something like this. Yeah. Okay. I'm going to take in this. Then let's have something like this too. So this is what a Japanese candlestick looks like. A full body candle. I'm going to say or explain to you what it does. Um, Capacity. Yeah, more like this. More like this. All right, can you see it? It's a full body candle. Yeah, we have another one too. We have this. Yeah. So this is what the Japanese candlestick looks like. Uh, then we have this. I think I should have done this one. This one. Same thing. We have this. Then we have different, very, very funny shape and different kind of candles with different understanding. Understand? We have something like this. All of this candlestick has it. They have like serious story. Yes, all of this. And there are a lot of them, and we're going to study all of them. This is an engulfing candle. You know, all of them have a story. They tell the strength. Uh, let me use this one. Decision candle. All right. Yeah. So this is a candlestick, and this is how they look like. All of this one, they tell a story. They all have their name. Engulfing, this one shows the little, there's a strength and bearish momentum, but not that strong. It's showing rejection. You understand? Shooting star, hammer, doji, with different names, different family, and we're all going to learn about them. We're going to learn about every one of them, and that's what the Japanese can do. This tells you a story. Imagine this one having a name. Remember, the bar chart was something like this. The bar chart was something like this. The open, the high, the low, and what the close. This is what the bar chart looks like. It looks like, yeah. So now this one is just a human being, is a sapien. A human being, a sapien. We know the line chart was giving us this. The line chart was giving us this. Oh, sorry, shouldn't have used this one. Uh, the line chart, something for the line chart. Let me use this. The line chart was giving us this. Yeah. It's not giving us a name. This one, we just know that it's a living thing, but it has not been categorized. It's a living thing. Now we know this one is a sapien, but now we know that this Japanese here, it's a sapien, a human being, and his name is John, is a man. We know this one, her name is what? Nkechi, she's a lady. You know, this one, her name is Bolanle. She's Yoruba. While this one is Effiong, is Calabar. So that's different between all of these things. That's the analogy I can use to get to explain, or the best way to explain this, all of this. Then let's move to the next thing. What we have here now is what? Support and resistance. So what is support? What is resistance? What is support? Support. What is support? Whenever we hear support, what do we mean by support? Yeah, support in in life is when something when you're being assisted by something. Yeah, that's support. That's general explanation for support. I don't know if that's the dictionary definition, but for me, I feel support is anything that can assist you. You understand? Something that assists you, that helps you. That's a support system. But in forex trading, support are price levels where price tends to bounce upward. Something is holding you. The floor is a support for you, right? Yeah. The table you use in your house is a support for you to place items on. You get. So the chair is a support for you to sit down so you don't fall because of the pull of gravity. Yeah, that's what support is. But in forex trading, support, these are areas or these are price level, historical price levels. It could be present price levels also, where price tends to fall into and what bounces back from. So let me give a visual display of this. still going to send you guys a note. That's why I'm not like writing the notes here. But if you want me to write the notes, you could signify. I could write the notes. Like I could just write it still. So all right. So right. Okay. Okay. So this is support. Support price level where. Okay. These are price levels where price tends to bounce upward. Then we have what? Resistance. We have resistance. Let's write this. So resistance, these are levels where price often reverses down. When something is you're resisting, it means something is preventing you, something is pushing you. It's acting as a force against, but not for. Support is acting as a force for you, while resistance is acting as a force against you. If I'm supporting you, it means I'm with you, right? I'm backing you up. If I'm resisting you, it means I'm pushing you, I'm fending you off. You understand? It means I'm not on your side. So that's like the best way to explain this. While the floor acts as support for us, we humans, what acts as resistance for us? Let's look for something that acts as a resistance for us. A simple analogy or illustration would be like a cap, yeah, or or a ceiling. Yes, your head cannot go through your ceiling, yeah. So that's a resistance. Your head can never go past your ceiling or your decking. If it gets to that place, it's going to send you back down and with a heavy blow, right? That's resistance. Okay. Gravity, good. It can only go up so far depending on the kind of support you have. But at some point, your support system might not be that strong and it to pull you down. Gravity always pull you down. Gravity, you can't see gravity, but it will push you down. Yeah, it will always push you down. So I'm trying to look for something. Yeah, a resistance now. If you have a tennis ball, tennis balls, it's always bound. Um it has a way it moves. It's always bounce. If you throw it in a tight space, in a small box, you throw it inside, what will you see? It just be bouncing within that range, up and down, because there's something above it resisting it from pushing past that level. Okay, so that is what resistance can do. Um, so support and resistance, we have like key ways for identifying them. You can call them reaction zones, entry points, and stop loss level. You understand? In the forex markets, key zone, stop loss level. They act as resistance. We're still going to get into stop loss and the rest. So you have an understanding of what it is. But let me give you guys like a visual explanation for this, a visual example. So now using our trend line tool or use our horizontal ray, which one should I use? Okay, let's use this. All right, turn this black. Yeah, all right. So we have this box. I'm going to replicate it. Let me turn this red instead. I'm going to turn it red or green. This should be green. This should be green. Yes. So then I'm going to clone this. I'm going to turn this red. Okay, good. I need to borrow this to clone. Uh, what did I do? Yes, just here. Um, clone, just here. I think someone sent a message. So, okay. Okay, what is the maximum percentage of your total capital for trading that you can risk in one trade? Okay. Now that's dependent on your your account balance and your risk appetite. Understand what you can be able to accommodate emotionally and psychologically. So now, depending on your account size, let's assume now we have an account size of $100, right? $100, and I want to be a conservative trader, and I want to risk, say, 2% of it. So what I do, I risk per percent. $100, I risk 2%. Yeah. Then if I was to risk, and 2% is how much? $2, right? So per trade, I'm risking $2 to gain 1 to 5 of what I have, of what I'm risking. So I'm risking 2% to gain, say, 5x 2%. Say 2 to get 10. You understand? 2 to get 10%. I'm risking 2 to get 6%. I'm risking 2 to get 8%. I'm risking 2 to get 15%. So that's if I was trading a larger account, I could risk, say, 1%. Let's say I'm trading a 10K account, $10,000 account. Trading a $100,000 account. I could be risking 1%, 0.5%. But if I'm trading small accounts, because of the profit margin, I would always want to do like 10%. Say on a $100 account now, you can risk 10% because then you tell yourself, I'm going to trade this account 10 times, and if I lose 10 times, then the account has gone and I am wrong, and I'll fund again and come back to the market. But if you have a good edge, when you if you risk $10, 10% on your $100 account, right? That's how much? $10, right? Which means you're risking $10 to get at least $50. You're risking 10% to get what? Times five, times three, times four, times five. It must always be above. You can't risk one to get 1%, 10% to get times one of it. No. Must risk your risk reward ratio must always be 1:3, 1:4, 1:5, 1:6, 1:7, 1:8, 1:10, depending on your technical analysis. And also, because if you risk one to get five and you eventually get five, it means whenever you lose a trade, you're still profitable by how many percent? Remember. Now, if you lose four times, you're still profitable. If you lose five times, you're break even. But if you risk one to get one, whenever you lose three times, you're what? Out of money. Okay, so I'm going to try and round up because I think we have about 9 minutes for this class. The timer is already on. So now let's go back to support and resistance. I'm still going to come back to your question. If you have more question on that, just send me a DM and I'll like give you a better explanation on it. Okay, and for support and resistance now, this is our support level. Support is always below. Let's get this down. Support is always below, while resistance is always above. Now, we have something coming in like this, right? Whenever something is coming downwards, yeah, let's use this as red or blue. Yeah, let's use blue so we don't confuse ourselves. Now something is coming downwards because it hits this support zone, yeah, you will always see a bounce off back to the upside. Do you understand? Whenever something is coming down, because it touches this support level, because there's a support down here. And support in forex trading is called demand. So, but that's uh, another lecture, you understand, entirely. But if it was to be resistance, whenever something is coming upward, so far it hits this resistance, yeah, towards find its way down. Resistance pushes it lower, more like gravity. It pushes it lower, right? So this is the simple illustration for what support and resistance. This is the best way I could explain it. If you don't have an understanding on this yet, so just send me a DM, okay? So this is what it is. Now let's go back to our trend line and market structure. What are trend lines and what are market structure? Trend lines and market structure. Texts, trend lines, trend lines. So what is trend line? Trend line helps visualize upward and downward momentum in the markets. Why market structure is how price creates swings. Yeah. So I think I should give you guys a note on that quickly because we have about 7 minutes. I don't want the time to run out of us, so we can have the recording perfectly. Okay. I'm still gonna send like the PDF for this note, but I feel everything we are doing here is even way better than the notes because I get to explain more. So the recording will be way better. Everybody had it. So this is what a trend line is. Trend line helps visualize upward and downward momentum. So when you come to your trading view, I know I've not taught you guys all about these tools, but by your left hand side, the upper corner of it, you see this tool. You see trend line here. You get? So this is your trend line. It helps visualize upward or downward momentum. It can also be used for so many things, horizontal momentum too. You know, when the market is in a range, but that's a gist for another time. Understand? So this is what your trend line does. It can create upward movement, downward movement, also horizontal movement. You understand? That's what your trend line does. Then what is the market structure now? Let's get a note for our market structure. Market structure is how price creates swings. We have a note, market structure. Market structure. So this is how price creates swings. Okay. All right, this is how price creates swings. So now price moves in different ways. Price moves in higher, you must have seen what I wrote here, up here. Um, break of structure, change of character, higher high, higher low. So there's an activity you're going to do for me. You're going to replicate this on your chart and send to me. Or no, on paper trade it. Just paper trade it. Do it on a paper and send to me. So this is market structure. Price moves in waveform, like we've learned so far, through the what? Through the line chart. And this is what price does. If it's in an uptrend, price moves like this, creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, so let me make this even cleaner by pushing this out of the way. Okay, all right. So now this is what an uptrend does. Price moves like this for our market structure. Price moves like this, creating higher highs and higher lows. It is moving upward, right? Now for a downtrend, this is what price does. Price moves what? Creating what lower highs and lower lows. It's moving downwards. Like you're taking the stairs downwards, you understand? You're coming down the stairs. So that is what we call it what downtrend. Lower highs and lower lows. And price moves what? In an horizontal way. So now for this, we also have terms of like break of structure, change of character. And this happens when price moves from what? An uptrend to a downtrend. So because now we have an uptrend moving like this, higher highs, higher lows, higher highs, higher lows. Because price is dynamic in nature, at some point price will do what? Change character. This swing you see now, it created a very long swing down here. It's creating what? Lower highs, lower lows. And this is how price changed from a bullish run to a bearish run. You understand? And at this point, you can say price has hit a level of what? Resistance that made it push downwards. You can clone this. And clone this and take it here and say price has hit a level of what? Resistance and changed character here. That's where you see your change of character represented as what? CHoCH for short. Then while price is creating higher highs and higher lows, what price is doing? Price is what? Breaking structures, because it's following a particular trend. We call it POS. That's what breaking structures is represented as. I don't want you to stress yourself about this. You're still going to have a note on all of these things. What I'm just showing you today is introduction to what market structure, technical analysis. This is what we'll be dealing with. This is how price moves. You understand? This is how price moves. This is how price moves. And you don't need to bother yourself. You guys are going to get this thing. Okay? So now, let's go back to our notes. Let's go back to our notes. Okay, good. So now we started what's technical analysis? We said technical analysis is study of physical price movement to predict future price behaviors. You understand? And we talked about the chart, the line, the bars, and the candlestick. Talked about support and resistance using different analogy. And now we've talked about trend lines and market structure. So now we have a physical class section. I've done that already. But the activity you're going to do for me is you are going to identify structure on a chart, break of structure, change of character, higher highs and higher lows. Based on what I've taught you now, I know we've not done much, but the way they always teach in Nigeria, you teach them AP, then you give them assignment on how to find G equals B. So that's what I'm giving to you guys right now. So you guys are going to go find out where the higher highs and higher lows are on your TradingView chart, like the VN I sent earlier. I asked if you guys were already accustomed to your TradingView chart. If you are not, send me a DM. This class is going to end in like 1 minute. That's why I'm trying to rush. So who has a question? Because if you have a question on your activity, forward it to my DM and I'll give you better understanding on it. If you have a question, hit the chat, the chat box and say hi. You have a question. Or if you don't, just give me a reaction so we can end the class. And I'll see you guys on our WhatsApp platform in the next 1 minute, because that's when this class is going to end. All right, no question. Second person, one person has reacted. So I'm just going to assume that we're all good. So I'll see you guys later on. Thanks for coming up on this class. I really appreciate you guys. I'll see you on our WhatsApp platform in the next 1 minute. Bye, guys. Talk to you guys later. Thanks for coming on.